and welcome to today's fast-paced video, which is called Black Monday. So let's keep on track of this Jim Cramer call and how we kind of backtracked on it today. I ran this extensive poll and most of you are not looking for any kind of a green day. We are looking for various shades of red, and the only point that is unsettled is what kind of a lower node are we going to get. Thanks for the great reception of the Saturday's video, which was truly packed with charts and chart-driven, data-driven conclusions to where we are standing, where I featured that weekly chart. So we got that bearish gap opening Sunday, tiny retracement attempt. Will it close the gap? Will it venture a bit higher? Will it get rejected? That's the shape of things on the hourly chart. Forget not that Asian markets had been quite roiled with 10%, Japan, China approaching these levels, short selling bands from Taiwan Stock Exchange to Thailand Stock Exchange. So these are generally not the most bullish kind of headlines one can hope for. I had been pointing out that the key bearish factors were the heavy element of forced selling as seen on Friday's close, willingness to buck very decent non-farm payrolls, and steep reversal on Powell's speech, which makes for basically just intraday gyrations. And that conclusion led me to forecast a red day for today, and definitely not yet a trend change. This kind of caution and liquidation is being mirrored in cryptos, where we are however already seeing some kind of a lower node being formed, and this is happening above my premium given target for Bitcoin lower bottom in the say most optimistic case. So there is still a way to go. This 75 area is not what I see as the ultimate bottom. However, the tide is somewhat turning, going into the US opening bell. Saturday I featured prominently bond market analysis, where I pointed out to non-satisfactory junk corporate bonds performance and the flight to safety with, of course, TLT ticking already somewhat to the downside, and that has to do with Powell's speech, which had also worked to lift up the dollar. So review Saturday's video. Thank you for liking that one and this one as well, and subscribing to the channel with notifications on. Pretty important because videos go up at the right times. Powell's speech in effect, long lower notes, and yields are not as primed to go on retreating in a straight line. Definitely not. Powell had not followed it, and that had helped the US dollar. This is how it looks pre-market on the 1 to 3 year short-term treasuries aggregate that I like to use as well, and we can see that there is clear rejection of retreating yields. So one could sense a bit of a retreat from the risk of sectoral performance ahead for today. So that tips the scales ever so much in favor of some kind of a lower node on the daily S&P 500 chart to come, meaning the buyers are on the move. Whether a trade deal had been achieved or not, whether Asian exchanges are in turmoil from Japan to mainland China, Thailand Stock Exchange instituting short-selling bans. At least that's not the case in the States, not the case in Europe, after a first modest 28 billion European tariffs against US goods being announced. There is more of a European response coming, and that is something that the markets will still have to grapple with. An interesting element to all the Asia turmoil that I had been discussing on Saturday, saying clearly that those with developed export sectors, whether highly sophisticated, such as South Korea, or refugee beneficiaries of the first tariff war during Trump 1.0 against China, such as Vietnam, are to be seeking tariff deals. Same for the Taiwan economic zone. So I wonder, India is as well trying to negotiate a deal. I don't think that Europe is ready to conclude one on its own. That definitely leaves the Chinese response as standing out for now, and of course the Hong Kong Stock Exchange felt it today as well. So we are seeing some kind of rise in yields, which is of course providing some support to US dollar, and I've been saying clearly that it is about the US dollar stabilization, and those signs that have been cropping up in the readiness to sell into the close by institutions and willingness to sell into positive non-farm payrolls and the Powell speech. These are warning signs still, so we are waiting for a reversal from the extreme panic, at least a few AII points higher towards garden variety fear. Look at the Euro-US dollar exchange. This is slightly turning in favor of the dollar, because the ascent today had been rejected for the euro, and that's a good sign going into today's session for the buyers and interim stabilization of US equity markets. Against the yen, it's not so prominent, but the willingness to buy the US dollar is thankfully prevailing here as well. Saturday I had been featuring volatility metrics and came to the conclusion that this volatility spike is not yet totally enough, and lo and behold, we got more of it right of the Sunday's open, with another spate of forced selling hitting, and now budding stabilization. So let's see the degree to which steam will be let off during the US session, but signs are there for stabilization lasting a couple of hours, even if no meaningful country deals had been announced. I had been clearly warning about more downside in precious metals and real assets as such and featured this chart in Saturday's video, where you can go and review it together with predictions for a volatile up and down path in gold when it's benefiting for a while and then giving in to selling pressure, because this is about, for selling, this is about collateral, and it's hanging by the fingernails above 3,000, so it is not exactly in the most solid of shape. Silver, done before by the strong rising candle, this is going to be still facing more of a trouble, whatever you think about paper shorts, manipulation, and that. This is what the charts and fundamentals are looking whenever there is a strong deleveraging event such as this one, and basically the world order is changing by the hour. These kinds of leveraged assets are double, triple exposed, so that's the case for silver as well, no matter the extremely solid real world case and stockpiles deficit for fifth year in a row. So that's the same story as well for oil, with OPEC flooding the market, and it frankly does not look like there is any kind of an imminent panic about strike on Iran, does it? Absolutely not. That time was prior weekend when I called for an ascent, and gradually as of Tuesday pre-market for oil to roll over to the downside, which is exactly what it did. And now I'm not calling for any steep recovery in black gold either. This is sideways at best, taking on the bearish gap, and let's see where it gets rejected thereafter, but the direction, the trend is lower. Copper equilibrium chart as regards prospects for global recession, which is the latest scare that markets are trying hard to readjust in the tariffs uncertainty, because frankly 35% US consumer market access is very valuable incentive to try to negotiate some country deals. So let's see how it goes, but this round, April 9th, kicking in, well, there's probably no saving for that, but still, even in light of all these developments, it's positive to see some kind of an interim stabilization in equities, and what I expect to be a day when the buyers will come to face sellers later on again. This is not the end of it, but for now there is some tentative stabilization in the face of uncertainty. My joint page will help you select what's right for you based on what and how you trade. Combine intraday coverage with daily analytics for the greatest effect.